Okay, so today we're going to be talking about Disney. They just had their earnings and just announced their first ever profit from streaming. So we're going to go over their latest earnings report, the impact on the stock, upcoming hikes for Disney Plus, Hulu, and ESPN, and the outlook when it comes to their theme parks. So, Disney has finally achieved profitability when it comes to their streaming segment, which includes Disney Plus, ESPN Plus, and Hulu. This is a significant milestone given the intense competition when it comes to the streaming market. So, with this announcement, the first time turning a profit, the Disney stock rose by 0.16%. So, taking a look at the stock price on the 5 day, you see it was up yesterday, August 6th, when this announcement came out. But as of right now, on the day, the stock price is currently 85.96 and it is down 4.46% on the day. So now let's take a look at their latest earnings report. So here are some highlights. Disney beat expectations with impressive numbers driven by their streaming services. This profit comes at a crucial time as the streaming wars are really heating up. Disney surpassed Wall Street's estimates. You see here, revenue came in at 23.2 billion, driven by strong performance from that streaming segment. And you can also see in this screenshot that the streaming income is up to 47 million. But despite this good news, Disney stock took a hit. But despite this good news, Disney stock still dropped, as I showed you on the day. Why is this? Because investors have mixed feelings about other aspects of the company's performance. Seeing headlines like this, for example, Disney's streaming business is profitable for the first time, but slowing US park ups anxiety. So, while streaming is up, Disney warned that their theme park revenue might decline in the coming quarters. This caution caused some concern among investors, and this is leading to a drop in the stock price. But when it comes to streaming again, there is another plus. They're having upcoming price increases. Starting soon, Disney will be raising the prices for Disney Plus, ESPN Plus, and Hulu. This move aims to boost revenue even further, but it may also impact the subscriber growth. I know me personally, I'm always evaluating those costs and I'll have to determine, do I want to keep all of my streaming services? When these streaming services increase their prices, it makes me evaluate and take a second look to determine if something needs to be eliminated or downgraded in order to keep the costs at a minimum. So, like I said, hiking prices can be a double edged sword. Of course, increased prices should be increased revenue, but they might also run off subscribers that think the cost is just too high. So, now back to some of the theme park challenges. Why do they expect their revenue there to decline? Some factors include rising costs and changing consumer behavior. But Disney is confident in their long term strategy when it comes to their parks and believes that new attractions and experiences will eventually drive the growth back to the parks. So, what does all of this mean for the investors? Disney's diversified strategy is both a strength and a challenge. While this current success when it comes to the streaming services is promising, they also need to make sure that their other segments are catching up. So, if you're continuing to invest into Disney or just getting started, you need to weigh all of the factors and understand the balance between their various revenue streams. So, I do hold Disney in my portfolio. It's less than 3% of my portfolio that I have over at Webull. Currently, my average cost is still $117.47. I really have not been adding to my Disney position. I never wanted it to be a large percentage in my portfolio. And as I said, on the day, Disney's current stock price is $87.96. I'm going to take a look at some price targets. So currently it is getting a over 94% rating as a buy. When I took a look in the Moomoo Investing app, the average price target is 128. A few of the current analyst ratings are JP Morgan rating at a buy, Morgan Stanley giving a price target of 110, Loop Capital giving a rating of 130. So Disney has reinstated their dividend payment, and I received my last dividend payment on July 25th, and that is 0.45 per share. So, as I said, I'm not really looking to add to my Disney position because it's nothing that I want to be significant in my portfolio, but just wanted to bring to your attention while the price point is again below $89 like it is today. If Disney is something that you want to have in your portfolio, you might want to consider adding it while the price point is yet again beat down, because if you're a long-term investor, you can hold and give it time to recover, and you will be a shareholder when the stock price is back to 145 or potentially even higher. So if you found this breakdown helpful, give this video a thumbs up. Share in the comments, what are your thoughts on Disney's earnings? What are your thoughts on Disney as an investment? Do you hold it in your portfolio? Are you concerned about the long-term performance of this investment? If you're not already subscribed to the channel, hit the notification bell so that you can keep up with my latest videos. As always, my investment links will be in the description and pinned in the comments. You'll be supporting the channel and we'll both get free stock. And also check out channel membership. Thanks for watching. I'll see you in the next video. Okay, bye.